Welcome back to the channel, guys. I'm your host, Buckney, and today we are going to talk about looking at your finances and figuring out what expenses you need to cut using the Pareto's principle. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So when it comes to building your budget, saving, and looking at how you can invest, a lot of people will probably suggest that you cut out, the $5 latte here, if you go to Tim Hortons every morning, or these little expenses, because everyone always says cut your expenses, but where do people typically go when they try and cut their expenses? And that is the small purchases. And that's probably like one of the biggest pieces of not financial advice, but one of the tips for those that are trying to figure out how to cut some expenses to increase cash flow, to increase how much they can save, and so on and so forth. So there's this principle that's out there that's called Pareto's principle, which is the 80-20 rule. If you haven't heard of that either, 20 or 80% of your results will come from 20% of your efforts or 20% of your focus. Typically, it's not 80-80. Let's say, to give you a better understanding, let's say you have a closet full of clothes. Typically, 20% of that whole closet will be worn 80% of the time, and the other 80% will only be worn 20% of the time based on Pareto's principle. You can use this Pareto's principle almost anywhere, and it can also be used in the financial world when you're doing your budgets and looking for cash flow, increasing cash flow, whatever it may be, because people typically don't know where to start. But when they do start, they start cutting out these little expenses. If you don't remember, I think whoever our finance minister in Canada is, she was talking about how people need to start cutting Disney Plus, which is the most ridiculous thing in the world because that's not going to make a dent in your cash flow. Okay. And so I'm going to talk about that. So typically, how do we break this down? Well, if you look at your budget, if you have written down your expenses from fixed to variable and so on and so forth, you will find out that 80% of your expenses are eaten up by 20% of all the categories. And it would make sense because those top categories would probably be car, your vehicle, home, and food. I am not including fast food into that. And you shouldn't either. Groceries are a different, separate thing. And so when you look at it, again, 20% of all your listed expenses take up 80% of your income. And so a good practice when it comes to doing a budget or figuring out where you need to cut expenses is not to go look at your $5 Starbucks latte, to go look at your $2 Tim Hortons or your $3 McDonald's. It's to go and look at the big things. If you want to make a big dent in expenses, you look at the things that cost you the most, if that makes sense. And to give you an example for myself, when I'm looking at cutting expenses, I cut as much as I possibly can at the biggest portion that is costing me the most, figuring out strategies on how to reduce the amount that goes out and to come in. To tell you the truth, every single day, I go and get a $2.37 McDonald's coffee every single morning. I'm not trying to make a 50-cent iced coffee or anything like that, as we know from other YouTube videos. I will spend that $2.37 at McDonald's every single day to get myself a coffee. And it's not breaking the bank. But for some reason, humans or people in general will typically think that the reason that they're broke is because of a Starbucks coffee, because of a croissant at Tim Hortons, or a double or a triple or a quadruple coffee. That is not the case. Or it's some subscription or so on and so forth. Yes, you can cut those if you want, but it's not going to make you save or invest to riches. Okay. What's costing you most is the lavish lifestyle, maybe the bigger house that you don't need, the nicer car that maybe you don't need. For example, I drive a 2009 sedan. It has like 330,000 kilometers. I pay for the services, I pay for gas, but I don't have a car payment. And that's one of the biggest things that probably the majority of Canadians will have is a car payment. But of course, they need to get from point A to point B. But the funny thing is, if you just take care of what you have, you don't have to make car payments, have no car payment, and it'll last you. It's pretty shocking that I have a car that has 330,000 kilometers on it, a sedan, and no dash lights are on. I might have to fix the dash though, because it might not be working, but it is working. I'm just kidding. But yes, that is the Pareto's principle when it comes to building a budget, is the 80-20 principle. If you want to make a dent in or increase your cash flow, look at the top 20% that are costing you 80% of your income and reduce those before going and reducing, let's say, a Starbucks coffee or whatever it may be, a bag of chips. But if you have excessive spending in those categories, yeah, you can cut it down, but it's not going to make a huge difference. And you can do, experiments on that with your budget. You can write down, it's simple math, and you can see the difference, and do it by percentage. Because if you do it by percentage, you will see the percentages in differences that it makes. And so that's pretty much it for the video, guys. If you need to find ways to save money, you need to go and look at the big things and start cutting those things down to increase your cash flow, to increase the amount that you keep in your pocket when you are, paying for bills. So don't forget to leave a like and subscribe, and hopefully you found some value in this video, and we'll see you guys in the next one. Bye.